Hey gang, Anthony Fontana here, live after 5. Just wanted to touch base with everybody. Very strong day at my office in Bay Shore. A lot got done. Team is growing, and everyone's just having a lot of fun doing what they do. So we're in the business of basically helping people get into homes. That's what we do. At least on the mortgage banking side. I'm a tax accountant on top of that, so I help you save money on your taxes. But I'm seeing a lot of news, a lot of people that are pressured. They're renters, and they're pressured in every direction but up to get into a home of their own. And I can relate to that because, many moons ago, I was living with my parents, and I couldn't really handle living with my parents too much longer. I ended up buying a home. It wasn't easy to do. The rate was around 6%. The down payment was, $750, a few $1,000s to close the deal. And it was a struggle. It was a struggle because, the price may have been low, but my income was also very commensurate at that time with what I was buying. Today, it would be 25 times what I paid for that original house, and the income would be many times what it was back then. But renters are under a tremendous amount of pressure. You have, rising rents are a big factor in inflation right now. And that's a fact, right? You can read it anywhere you want to go. You can read about that. So with rents being a part of inflation, why is that? Why are rents moving up? Well, rents are moving up as houses change hands, the new landlords come in, they have a higher interest rate, they have to make their money back. They're paying a lot more money for the house that they just bought, and they have to recoup their costs. They have to do what they need to do to survive. They have no choice. So the rents go up, and people feel the pressure. Rents used to go up $50 a year, and then they go up $200 per month per year. It's a lot of money to a lot of people, especially when your income's not going up like that. That's the issue. But they're being pushed because they're nervous about, number one, fear of missing out, the whole FOMO effect, like this is a housing boom. Well, I guess it is, but with your average rent of 14% year over year, to like almost $1,900 a month, we're talking nationally now, home prices have followed suit. You have home prices that are up 14% year over year in December. I think the average price is like almost $360,000 per home nationwide. That's like, holy cow. That's a tremendous issue for people. And if you're in an area like Miami or Austin or certain areas down south where people are flooding to, you're talking 30% increases in rent. Well, that can hurt. So if you're a renter and you're paying out all this money, you've all done the calculations. If you're renting, I'm paying $3,000 a month. That's $36,000 a year. In 10 years, I've paid my landlord's mortgage off. Well, he's giving you a place to live. Yeah, you have helped pay his mortgage off, no question about that. And you had a place to live. But you're not taking advantage of a whole herd of things if you can figure out a way to get into a home without killing yourself and stretching yourself to the point where you get in and now you have absolutely no money to spend on anything else, on the contingencies, on the emergencies. Not a good idea. But with mortgages that, you could do a 3.5% down loan, and people talk about rates are going up. Yeah, well, 3.57, 3.58 is like an average right now. Our rates are pretty much in the fours already. I don't think they're going to go to 5 and 6%, but in the 2000s, rates were 6%, but that's like chump change to me. Because back in the 80s, I saw rates hit 16%. I was working in banking at the time, and I was buying real estate. And I remember it like it was yesterday, where an interest rate of 16% on a mortgage was like, holy crap. And people were buying homes. They were still closing. They were still buying. Most of them, all of them either refinanced or burnt their houses down and got the insurance money. So we're in a market right now that has already existed many times in my own life. I've seen the same iterations occur. Rising rates, rising prices, buyers are flooding the market, buyers are getting shut out, homes are going into foreclosure. Look, it's a cycle. Everything is a cycle. Rates are moving up. I talked about this half a year ago, quite frankly. I talked about it in September, October, November, and December. In fact, in December, I was very specific. I said, you can count on 3 to 4 rate increases in 2022. And sure enough, within a couple of weeks of that post, the Fed came out and said, we're going to raise rates at least 3 times in 2022. And sometime in January, I said, we're probably going to be looking at our first increase sometime at the end of March. And of course, they just came out and said in their first or second meeting in March, they're predicting a rate increase. I'm saying it's going to be about a 1/4 point. There was talk that it could be as much as a 1/2 point. Rates are going up. No question about it. Prices are going up. No question about that. What does a renter do? Well, the longer you rent, the less time you have to save, right? The less money you have to save. And that's the challenge that people have. They're putting so much money into the landlord's pocket that they can't save enough. Often, it's a matter of just trying to figure out a way to save a little bit every day. But the problem with that is, as everything moves up, your savings are dwindled down because you need them to pay for food. I spoke to a guy today who has a 401k. He's a renter. Probably $2,800 a month. And we talked a little bit. I'm like, look, you don't have the down payment in cash. Maybe you could get something from family. If I can put you in a house at 3.5% down, maybe we can go for a seller concession on the closing cost where you won't have to lay out as much at the closing in addition to your down payment. I said, but you have a 401k. Well, my company won't let me close it out because I have to quit to do that. I'm like, well, then they didn't explain it to you the right way. Here's how that works, I said to him. You can borrow up to 50% of your 401k. 9 out of 10, 99 out of 100 401ks will let you borrow against those 401ks. You can borrow against that 401k for your down payment to buy a home. We can do that for you, and we don't take the payment of that 401k and apply it against your debt ratios because you're paying yourself back. We're fine with that. We're okay with that. You'll figure out how to do that, but that's where your down payment can come from. We can talk to family and see if you can scrabble together some gift monies. We can accept gift monies. Absolutely. Sometimes the employers can kick in a down payment. We can work with that. There are ways to accomplish the goal without closing and having not a dollar in your pocket. Just not a good idea to do that. You have to be able to buy a home and have some money to spare, because when you move in, you got to turn on the cable. You got to turn on a new phone. You got to order oil for the tank. You got to turn the gas on if it's gas heat. There's a whole myriad of things that you have to do, and you always have to have at least 25% of that mortgage payment on the side for the expenses of running the house, just in case. The just in case money. So I'm encouraging people to think about getting out of renting and buying this year. You're always going to have rising rates, and you're going to have rates that go down. You're always going to have rising prices, and sometimes prices will go back a little bit, but not usually. So if you're rushing to buy because you're worried about the next price increase, the next rate increase, stop rushing. Put your plan together. Get it on paper. Figure out where you can get the money to put a down payment together. Figure out how much of a down payment you can put down. Get qualified in terms of how much you can even afford, because you just don't know. And if you own a business, I'm going to want to see 2 years of that business in order to help you get that house, because I want to see a 2-year average income in a business that's been established at least long enough where I can believe it's going to continue, right? And there are some bankers that will say, oh, I can do it in a year. Yeah, there's all kinds of different guidelines for that. There's 100 different programs out there. So just generically, you own a business, you're going to have to show a couple of years of profit, which means you're going to have to pay IRS its due share. You're going to have to pay your state its share of the taxes on that profit, right? So you have to do things the right way. If you have a job or a couple of jobs and your spouse works, if you're married or if you have a domestic partner, you can pool your resources to get qualified to buy. But to rush to do it because you're afraid is not a good idea. You need to put a plan of action together, okay? Bought that first house. Really, I kind of had to do it. Took me 6 months to close, right? It changed my life, quite frankly, because I realized if I was going to pay a landlord at the time about $400 a month, well, I can pay a mortgage around $400 a month. Right now, rents are starting to approach mortgage payment levels. So don't calculate what you're missing out on. Try to figure out a way to get into the market at some point in the future, we're not talking Tuesday, maybe not even June, but what about January of 2023? Trust me, it's going to come that quick. We're already talking about Christmas gifts, and we're goofing around with that. Year's going to go quick. We're already in the middle of February. The Valentine's Day is next week. The year's going to go quick. Summer's going to come and go like that. Your kids are going to get older. You need to decide, just continue to rent for the rest of your life, and that's okay if you do that. There's no stigma, okay? But if you say to yourself, look, I'm not creating any wealth. I'm not taking advantage of the tax laws. And I firmly believe that real estate is the quickest way to create wealth, security, and to fight inflation. I'm proof of that, 100% proof of that. Done it all my life. And most of the people that I know that bought real estate did very, very well. My daughter Erica bought a house in 2019. It's worth 40% what she paid, 40% more than what she paid. Okay, no question about that. My ex lives in a house in Brooklyn in Dyker Heights. We paid $255 for it. It's worth 5 times that today. No question about it. She had a roof over her head. Now she's got a huge amount of equity in there that she can literally sell that house, bank all that coin, and retire and have an income stream from the equity of a property that we bought decades ago. You don't lose money in real estate unless you sell quick. Now, there are those of you that want to fix and flip. It's a different concept. We're not going to talk about that tonight, but I'm talking specifically about renters that are out there in the hunt. If you're out there looking right now, make sure you have all your ammunition in place right now and do it the right way. Make sure you have the money saved or you have a plan to get it. Make sure you have some extra savings on the side that you can tap for those lean months where you might have a lean month or two. You should always have a few months payment in the bank. Some people talk about 6 months mortgage payment in the bank, or that's not that easy to do, trust me. But if you can do that, fantastic. If you have a family that's kind of well off, they can always help out too. But bottom line is this. This is a great market. Just like the market was in the 2000s, just like the market was in 2020, just like the market was in 2018. It's always a good time to get into real estate. It's always a good time to make a decision. If you can put your foot in front of it, get involved in it, because 5 years from now, you will look back and say it was a fantastic decision. I look at every decision I've ever made in real estate as a positive one. If I bought something and it went down in value, I just kept it. I waited for it to go up in value, right? You rent, you pull money in, you get a boarder in your basement, you do whatever you have to do to make it work. But I guarantee it, the peace of mind that you'll have having a roof over your head that you own, and I know the bank owns it, that's ridiculous. The bank financed it, just make your payments. You have to make your rent payments anyway, and guess what? You miss those things, you're on the street. In a house, you're probably not going to be on the street because banks will work with you. And I've seen that. I don't know, I've probably done $300 million worth of business in my day. And having that much of a background in it, man, I've seen people get in and, some people got foreclosed, but the majority survived. The majority were able to sell those properties that I sold years ago. They were able to make a profit on it. Guarantee it, you'll do well in the business if you focus and you do it the right way. Don't rush it. Don't look at the naysayers in your family. Say, don't do it. You're making a mistake. You're crazy. You're not crazy. If you're hungry for wealth, if you're hungry for success, if you're hungry for putting a key in the door and saying, this puppy's mine, then real estate is really the only way to go. Not the new car, right? Buying a brand new car for cash is just dumb. And don't do that if you're looking to buy a house, by the way. Don't finance anything if you're looking to buy. Put the money where it can earn you. Put the money in something that can earn assets for you. That's how you do it. If you put money into a depreciating asset, you might as well just fling it out the car window. Put it into something that's guaranteed to appreciate because they're not making more land. Most towns are limited with how many more houses can be built. You have young people are becoming 18, 19, 20, 25. They will need a place to live. You will absolutely kill it and crush it in the next 5, guaranteed in the next 10 years if you get involved in real estate. So that's my little tidbit for tonight, and I hope it helps a little bit. Share if you care. Hit me up if I can help. Bottom line though is this is advice from somebody that's actually done it. I'm not speaking from my hat or my hair. I'm speaking because I've done it. I've walked down this road many, many times, and I've helped hundreds and hundreds of people do the same thing. So you can get things going for yourself. Hi, Ray. How you doing, brother? I appreciate you. Hi, C. What's going on, brother? And by the way, if you need your credit fixed before you do it, you're going to call my man C. This kid's killing it. He knows exactly what he needs to do to get your scores up. Guaranteed he'll be able to help you. So if you need credit fixed, get that first. Save money, get your credit fixed, and pay attention to the experts that know what they're doing. And don't do things on your own because you think you're too smart to talk to anybody else. Learn from others that have already done it. So Christine, appreciate you on here. Hi Marta, how are you? Michael, you're in the house, brother. I'm waiting for your paperwork, my man. Hi Dan, what's going on, kid? Hi Roy, hey Sergio. My goodness, so many of you were in here. Goodness gracious. Wow. I'm going to jump, guys. I literally spent like 6 minutes with MJ eating a sandwich, and now I'm going to go grab her and hang out for a little bit. Maybe grab a glass of wine, and then I'm going to get back to work myself. A lot to do, a lot on the plate. So love you guys. Have a great night, and we'll catch you later on. Be good. Any questions, inbox me, please. I'd love to answer them for you.